During the week, MTN Nigeria, a leading telecommunications provider, recently released its 2023 financial report. While the report highlights strong growth in subscriber base, data usage, and mobile money adoption, the company also faced significant challenges, experiencing a loss of 137 billion naira, primarily due to foreign exchange losses. This morning, joining me to further review this report and the equities market is Azeez Lawal, MD, Trust Banc Asset Management Limited. Thank you so much for joining us on Business Edge.
Good morning. Thank you so much for having me.
Now, one of the catalysts for a surge in the equities market is company news or corporate action. However, recent events have not been so positive. So isn't it looking all too gloomy for investors currently? And is there any light at the end of the tunnel?
Yeah, thank you for that question. And once again, thank you for having me. For an equity market that still tops the world, we are still top 3 in the world as the best performing market year to date, right? So the fact that we have started seeing a bit of price correction around some selected tickers in the industry does not really, in the market, sorry, does not really mean it's all doomed, right? So there's not just lights, very strong lights, and we're very positive the decline that we saw in February will possibly not persist into March as we begin to see company results, full year results, corporate action, dividend announcements, like we saw last week, where Dangote declared 13 naira dividend. Also, Boa Cement also came out with good dividend numbers, and we have also seen, like you reported, NGX performance. They have also declared dividends, so we expect that such corporate announcements will return the market back to positive performance in March. Thank you.
Well, even if we continue to say that we are the top 3, probably in Africa and the world, and we continue to see a drop in the shares and the values, the question would be, for how long can we retain that spot? We quickly take a look at one of the stocks. MTN emerged as the biggest loser in the past week, shedding about 46 naira 80 kobo off its share price. And another big loser was Nestle, shedding about 200 naira during the week. So can we totally attribute this performance to their 2023 financial year results?
Yeah, absolutely. Nestle, for example, these are companies that you call legacy stocks, right? They've been trading in Nigeria since 1961, right? So largely, in fact, primarily, we can attribute that to the unification of the FX, right? So particularly for MTN, the performance and like it widely reported that they made 740 billion naira foreign exchange loss. Actually, it's actually about 834 billion, right? But they also made some gains that kind of reduced reduced it to 740 billion, and like it is reported in the financials, is basically attributed to specifically the unification move of the current administration, right? But again, you can't rule out such losses from companies like MTN, because if you go down into the composition of that loss, right, about 44% of it is from their leasing liabilities, right? So what is common with telecommunication industry in the telecommunication industry is the fact that they are operating towards a they kind of lease them from companies, and typically a lot of these transactions take place at FX at foreign exchange level, right? So significantly, majority of the losses, about 44%, is from lease liabilities, another over 20% from borrowings, then a bit of trade payables and derivative liabilities. So that singularly was what drove the performance of the company year on year into the negative region. Thank you.
Okay, well, in a way to mitigate the impact and try to give a bit of confidence to the investors, we see the telecommunications giant rolling out plans to mitigate its exposure and risk. But the question will always be, do you think that whatever plans they choose to roll out would be enough to bring back investors' confidence as regards the losses and what the future prospects might be?
Yeah, I think that has two questions in one, right? Where whatever plans they have, will it be enough to normalize their bottom line performance? Definitely. Is MTN, right? They have enough structures in place to take care of this kind of risk or loss going forward, right? But as far as investor confidence is concerned, right? So a lot of stocks in the market, really, a lot of stocks. You have banking stocks, you have that are doing very well, right? And they're going to pay very good dividends, right? And then you also have new listings, like the market today is looking forward to another new addition to the list of stocks that we traded on the market. So those kind of listings will definitely boost investor confidence. So the fact that some stocks are declining on the back of poor performance, particularly year-on-year performance, yes, it will affect those particular stocks and possibly weaken investor confidence in the companies in that sector. But generally, the sentiment is still positive in the market and possibly will grow stronger. Thank you.
Well, however we choose to see, we see that it has actually affected the consumer goods sector terribly. And a lot of people are still asking, how will investments be gotten, or how will investors be attracted into the Nigerian environment? And some people are saying that probably the government can come up with some fiscal policy tools to address the situation. Do you think that would be apt at this time?
Yeah, on tools, and thank you for that question. It's quite an interesting one. On tools to improve the current situation, particularly addressing FX, right? You mentioned fiscal, which most of the time, right, is going to be long term, right? And we have these legacy issues that not what fiscal can almost address immediately. Right? But we know that from the angle of the CBN, I mean, they've been doing a lot, right? And like the investor call that was held last week, right? We saw that, I mean, they promised investors that they were going to increase rate at the next OMO auction that was held on Friday, right? And they have done that. And from that OMO auction alone, they were able to raise from foreign investor over $500 million, right? Again, I mean, such kind of inflows from foreign portfolio investors would definitely provide liquidity for the CBN to further support or intervene in the FX market to support and strengthen the naira, right? So those are moves, those are monetary policies that and quite a number of other monetary tools that the CBN can call to use to address some of these challenges, particularly FX. But typically for fiscal, definitely is going to be longer term. When you talk about fiscal, for example, addressing FX liquidity, you'd expect a situation whereby our daily production, as far as oil production is concerned, will move significantly, maybe from 1.5 million barrels per day that will be presently maybe to around 1.7, possibly 1.8. But that's going to take a longer term, right? Like we've seen in just 1 week, with the CBN using the OMO tool available to it, it's been able to raise over $500 million in less than a week, right? So we expect that the CBN will continue to use such policies and tools within the disposal of the CBN to arrest the current FX instability. Thank you.
So then what about the shareholders who are actually studying the trend and are sitting on the edge, a bit nervy, looking at how the market is panning out? How do you think they should react? Should they sell off? Should they hold? Or should they buy more?
Yeah, once again, it depends on the stock that you're invested in, right? So it depends on the stock you're invested in. That's what is going to determine, right? But typically, what we advise clients is that when you come to the equity market to invest. I mean, it is called a variable income instrument for a reason, because you really never can tell, too many uncertainties, and that's why it's equity, very risky. So typically, when you invest in any stock, you are investing based on your investment objective, your appetite to absorb risk, and the how long you want to stay invested in such stocks, right? So if and also one of the things we advise is that you diversify. So if you're well diversified and all these investment basics have been considered, really there's really no room for panic, right? Because as some stocks will lose, some will gain. So as there are room, as like some stocks or industries or sectors within that market are kind of they are going to sink your capital, there's also always the opportunity for you to also improve or grow that capital in other sectors if your portfolio is properly diversified, right? So for banking stocks that are paying dividend, for example, if you have such stocks, I mean, it's an old, right? Meanwhile, for some that are challenged, particularly consumer goods, right? Again, depending on your investment objective, risk appetite, or how long you want to stay invested, you may have to sell or even average down your cost by buying more. Again, to take these decisions, you really need to speak to a stockbroker. Thank you so much.
All right, so let me quickly get your reaction on the outlook for 2024, seeing that the twin factors of inflation and naira depreciation have even worsened compared to what we had in 2023. But I know you've spoken more about the tools that are needed, either monetary or physical. But then when we look at it holistically, what do you think the 2024 will portend for the stock markets?
We are still very positive that the stock market is going to perform very strongly this year. Already, we're just a few basis points less than 40% performance yesterday. That's by all standards. That's an excellent performance already. But we expect that this will be sustained. May not necessarily be at the momentum that we saw at the start of January, but we expect that this will be sustained, particularly on the back of, I mean, a lot of the policies, some of the good moves that we've been seeing from the CBN and the federal government. Again, these policies, they take time to settle into the system. So we expect that some of the effects and positive impact of these policies will begin from maybe Q3, right? I mean, as those policies impact the economy positively, the performance of companies will improve, and the confidence of investors in investing in such companies that are listed will also improve, right? We also expect that this tightening regime of the CBN will begin to see the full impact, maybe from Q3 or Q4 also, right? By the time this happens, and we have a sustained pipeline for bringing in foreign portfolio investors, where the naira stabilized over a period of time, and definitely to provide more liquidity, stabilize and strengthen the naira, right, and possibly make things cheaper generally, cost of operations generally for companies. And for looking, the projection is that inflation will possibly close the year, maybe, I mean, the average inflation that we're looking at this year maybe around 21 to 22%. Typically, as an investor, you benchmark your investment target or returns target or projections on the base of forward-looking inflation position, not necessarily current position. So on the back of that, and based on these policies, we expect that, I mean, the equity markets will still close very, very positive and strongly positive this year. Thank you.
Okay, now before I let you go, sorry, Transcorp Power lists on the local bourse today at a share price of 240 naira. Quickly, I'd like to take your thoughts or reactions to this.
Yeah, thank you for that question. Like I mentioned earlier, those are the kind of listings that comes to the market that kind of boost the confidence of investors, regardless of the headwinds and other challenges with some companies and sectors, right? Transcorp Power listing at 240. If you can get it at 240, come on, go get it, right? Because the closest peer of Transcorp Power is Gregu, and Geregu is currently trading above 900, right? And in fact, the capacity of Ugeli, the main asset of Transcorp Power, is significantly more than the capacity of Geregu. So by that, by valuation, it expects that at some point Transcorp should trade. If we just value based on fundamentals, you'd expect that Transcorp Power at some point will trade higher than Geregu, right? That's already trading above 900. So imagine if you can get Transcorp Power 240, right? So it's a strong listing. It's a very positive news for the market, for the economy generally, because it's going to significantly grow the market cap and depth of the equity market. We're very, very happy about it. Trust me. The investing environment in that equity world, we are properly very happy about that. Thank you so much.
Well, maybe we can get more of these stronger listings and stocks into the boards in the coming days or weeks. We'll find out. Azeez Lawal, MD Banc Asset Management Limited. Thank you so much for talking to us.
Yeah, thank you so much for having me. Thank you.
Let's talk about Africa's global trade that's said to be underperforming. Now, Africa's contribution to global trade remains below 3%, with merchandise trade indicating that African nations trade more with countries outside the continent. The Economic Commission for Africa report on regional integration highlights slow progress. The Program for Infrastructure Development in Africa has mixed results, with advances in roads and ICT, but minimal progress in rail and energy infrastructure due to financing challenges. So, Stephen Karingi, ECA Director, cited challenges like unconstitutional changes in government, unemployment in some areas, and poverty. The report notes minimal returns from the African Continental Free Trade Area, with intra-African trade decreasing from 14.5% to 13.7%. Africa now faces a significant infrastructure financing gap, estimated at between $130 and $170 billion annually, prompting exploration of innovative financial mechanisms. At this time, Clive Ramathibela-Smith, a senior executive partner, Hecare Capital and Partners, joins me to unpack this. Thank you so much for joining us.
It's an absolute pleasure. Thank you.
So, how have recent shifts in global trade policy impacted the landscape of business operations in Africa? Let's start from there.
What is very interesting from the report, it cites some seriously disturbing statistics that show that decline of trade for South Africa, for example, for Nigeria, these countries that are the conglomerates of the African continent, in itself, its operations have declined. So what you look at there, if you look at port activity, for example, that has gone down quite significantly by about 54.7%. If you look at, for example, the number of goods in trade between the African countries, that has also decreased, as you've seen there, to 13.7%. So what does that mean? It means that we're trading less and less amongst ourselves, despite the fact that we're in an intra-Africa trade policy. And yet the foreign exports have continued, or imports have continued to increase, meaning that we are trading more with the world than we are trading with ourselves.
So now you've talked about how abysmal e-commerce vanguards in Africa have performed in recent times. But then while Africa faces numerous challenges related to tariffs and even trade barriers imposed by other countries, has it also been able to leverage on its own trade agreements, probably regional initiatives, to navigate those challenges and probably facilitate trade within the continent?
You know, as you're speaking about it, my brother, it sounds very romantic. It sounds like something that can be done, you know, within the spark. That's exactly what we've been trying to do. Unfortunately, industrialization has a number of spectrums that need to be focused upon for it to be successful. For example, I'm not going to go far. I'm going to go back here to South Africa. Look what's happened with South Africa and the rest of the world in terms of what we've done with the agreements that we have, for example, in the BRICS with China, Russia, and India. That BRICS consortium, obviously, its focus is more on doing more trade which we're importing more than we are exporting. We are still focused on our resources, which is our commodities resources, which are still being taken out of the country without fully having the beneficiation that is required for them to create more value. So we don't have enough manufacturing, we don't have enough beneficiation, and so therefore it makes it difficult for us to actually do anything else from the raw products. And they're still leaving the shores and coming back to us in a piece of jewelry or in a piece of material that we then purchase back. So that's the first challenge. If you look at a country like Nigeria, if you look at countries like Cote d'Ivoire, they are supposed to be surpassing by providing the resources of trade that are going internationally. For example, what's happening with the cocoa industry, what's happening with the tea industry, what's happening with our rice industry. All these agricultural products are still mainly going out as raw as they are. So to create value and to build momentum for us to trade more aggressively, we have to look at regulation, yes, but most importantly, we must look at having fully furnished products that we can be able to trade.
Well, it's quite interesting that we're discussing this, Clive, because we know that Africa possesses a wealth of resources and a growing manufacturing base. We even have the AFCFTA agreement. We have other regional agreements. So we have manpower and policy resource, but then we've not been able to fully utilize these resources. So what strategies can be implemented to improve its share in the global export and import markets?
A very important question. So the regional conductivity that has been taking place, for example, you have in SADC, you have further up North Africa, you have the West, and those relationships are also very sensitive, one must say, because we know what's going on with the latest coming out of the western side of Africa. The East Trade Mark, for example, that's also very key to Africa's growth. But that hasn't seen enough of an influence. There are countries individually, I must say, that are doing much better. You know, the likes of Kenya, the likes of Rwanda are doing a little bit better. They're starting to learn that you need to create a very good, strong value chain in order to attract better yields when it comes to trade. But the core factor of all economic 101, if you want to put it that way, is to make sure that you are developing manufacturing, industrialization. Industrialization does three things that are very core from a continental perspective, but also from a country individually. One, it creates jobs. We've got the highest number of young people on this continent. They all are going to require jobs. They're all required to be active in the economy so that we can make a significant contribution. Two, we need to increase industrialization, meaning that we need more ports of entry so that we can be able to make it easier for us to trade amongst each other. That is why we love the story that is happening between Botswana and Zambia. The bridge that's been connecting those two particular countries to make trade much easier. We need easier ways of making trade as well on the continent, and the agreements that you're talking about, like the SADC region, like the Africa Intra-Trader Agreement, all those are very important to it. But there's no point having it on paper and not literally acting it out and making sure that you create that trade partnership on the continent as an intracontinental effort. That still needs to happen. And then the last bit that, you know, if you increase industrialization, if you increase capacity, if you build more ports, what that will enable us to do is to have ease of reference. Remember, we are still being hit hard by the policies of Europe, policies of China, policies of the United States or the West, as it were. But if we created a more subsequent, or rather a more synchronized effort on the continent, we can then gel much better. And these contracts that we have are the beginning of that. But it needs to be working. We need to implement what is in the policies so that we can see better growth, better stability, better economic activity, and a creation of jobs on the continent.
Clive, earlier on you talked about some exportable products that Africa has in abundance. But then even as we talk about industrialization, we probably may need to also look at the need for diversification, probably beyond primary commodities. And some people are asking the questions if that can be a key driver in achieving this goal.
I mean, it's obvious. I mean, you look at the likes of Singapore, where there is absolutely nothing to no resources, but the country just grew in 10 years to the size that is unbelievable. And there's many other examples. I mean, you look at places like Dubai, for example, you look at the Middle East, how it's developed so quickly over a short period of time. And the secret has always been to create a platform for trades to be made easier. So people are simply going to Dubai, for example, to do business, to make business, because it's an attractive place to be. So we need to understand as Africa that we do have that potential and nothing is stopping us. By the way, we are the powerhouse of trade. If you remember, if you go back in history, you look at the history of the Egyptians and what they did during that time, the most amazing rulership at that point in time, the pharaohs being able to spread trade all over India, all over the European countries. So we have the capacity. If you think about the kingdom of Ethiopia, for example, the trade we had at that point was the best that as the world had ever seen. They'd never seen such incredible ways of doing trade on this continent. This is the history of Africa I'm talking about. So there's nothing stopping us from being able to be strategically positioned to take advantage of the trade market and to increase capacity internally for us to be able to make sure that business stays in Africa. Those commodities must benefit the people of Africa. And at the moment, although we're not colonized, we are behaving like a colonized continent that continues to export its goods without really getting the benefit of enriching its country and its people.
So in terms of increasing capacity, let's look at the supply chain. According to what we know, building supply chain resilience is crucial for African businesses to compete effectively in the international market. So if we are going to concretize the steps, what do you think they should be in terms of taking these steps and ensuring that efficient logistics, diversification of export markets, and the mitigation of risks associated with disruptions in global supply chains are eliminated?
One of the first things that I would start with is security. That's very, very key. We need to be sure that there's not going to be any pirates that stop ships from getting to our shores, so that trade can be easier, trade can be safe. The second thing I would also note what's happening, for example, in South Africa, in Durban, one of the biggest port managers in the continent, Transnet, is struggling right now to get goods out of the country. It's struggling right now to do trade with other countries. People have to wait. In December this year, we had things that couldn't come into the country because the ports are not efficient. And you can see a similar trend if you go around the continent and see what the state of our ports. That needs to be changed. That needs to be elevated. That needs to be put right. The infrastructure has to allow for us to be able to handle capacity. If you've been to Hong Kong, I'm sure you have. If you look at those cranes as you're about to land, you look at them covering the entire seashore there to show that they are serious about trade. If you go to the US, you find the same. If you go to Europe, if you go to Turkey, you see the same. We need to be the same. And I know there are ports that are very capable on this continent, particularly in Nigeria, which is the closest that we have to Europe and to the United States. These are places where I would think we should be focusing on and enhancing and engaging, so that even the goods that don't have to necessarily come through sea can be shipped across intercontinentally. So we are creating problems for ourselves because we're not managing what we have well. And so that has decreased our efficiency to be able to penetrate markets easier. And so therefore that needs to be rectified. And maybe, I don't know, I'm not saying it's the only solution, but maybe privatizing and removing government from managing some of these pots of trade, that might just help us to get out of the pit hole that we find ourselves in.
And that's why it's always said that government needs not to have anything to do with business, but then create that enabling environment for the private sector to thrive. Maybe that would help. Clive Ramathibela-Smith, Senior Executive Partner, Hecare Capital and Partners. It was nice talking to you. Thank you so much.
Absolute pleasure. Thank you.